Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracey Ryniec, and this week I'm joined by Kevin Cook, Zach's strategist, who heads up Zach's Follow the Money Trader and also the Tactical Trader. And we're going to discuss our kind of quarterly update on what the hedge funds are doing out there when they file their 13 Fs. That tells us all what their trades are doing and kind of what they're thinking about the market. We're going to look into what areas they see opportunities in this year because it's been kind of rocky. So welcome, Kevin.
Hey, thanks for having me.
Yeah, this is always interesting. And I thought this time was real interesting, some of the areas they're going into, because it seems a little different than some of our focus the last times, which was on like the drug stocks and all of that stuff. And this time I noticed gold. Gold was a big area. And I was kind of surprised by that because I kind of feel like gold is done. And so, but maybe not.
There's a lot of true believers out there. You know, the biggest hedge fund in the world is Ray Dalio's Bridgewater. And he's like, if you are not an investor in gold, you either don't understand what's going on now or you don't understand history. I mean, that's how adamant he is about it. You need, so when the largest hedge fund manager in the world makes a statement like that and he's cautious about equities and has been for 2 years, I think that motivates a lot of money managers to say, well, should my clients have a 5% allocation or even a 10% allocation to gold?
Yeah, one of the biggest gold investors over the years, and he was mocked for numerous years, was John Paulson.
Yeah.
In his own big hedge funds there, he had like probably the biggest position of anybody, and he owned the gold ETF, but he actually reduced it. But some of it, I guess, apparently was to back other shares of his fund is why he reduced it? Or no, you're shaking your head.
Well, no. I'm shaking my head about how awful his timing was.
Yeah.
I mean, he's letting go in the fourth quarter when GLD is trading, say, 102 to 110. In October, he still could have sold some at 110 in October of last year, but then it got down to, so you don't know what his average was, but he basically took a loss on several million shares. I could have been as many as 9 million shares. Let me take a look. But yeah, and then it soars in January and February.
Oh boy. But other ones have been adding on this big rally. And one of those I saw, Eaton Park, they purchased 3.6 million shares of, this is in the gold ETF, the
GLD?
Spider. Mm-hmm.
Okay.
And that's a $422 million position. And then I guess Bessemer Group, they also bought a decent share for $64 million. So that is a way to play the gold trade, don't you think, to buy the GLD?
Yeah. And other big buyers, I see BlackRock, which could be many entities under BlackRock, bought 8.4 million shares. I mean, that's nothing nothing for them. But but this Eaton Park, I don't know much about them. And that's a new position, 3.6 million shares in Q1.
What about actually buying the miners? Because I saw that Soros acquired a small position in Barrick Gold. It's just a 1.7% stake, but that seems riskier to try to get into the actual miners.
I mean, obviously his timing was good there because Barrick is I was bearish on the miners because I thought they'd run too far. But, here are the two things I missed is the gearing that a miner has, right? So a 10% rise or a 20% rise in the metal, for some of these companies, it might equate to, 20% to 50% rise in EPS or operating leverage. So that's the gearing that they have, and they're so beaten down. But my thesis for being bearish on the miners was that they're so over leveraged to begin with. Yeah. I mean, they're under so much debt but the other thing I was fighting is the I don't want to call it euphoria, but the rekindling of passions. Gold is a very passionate trade.
Yeah.
And boy, everybody's piling in.
Right. That's what made me a little nervous and a little surprised that the big guys are also piling in.
Yeah.
I guess they're not immune to the emotional trade.
Yeah. And you opened our segment today talking about how this talk's going to be different. And what's different is, all the resource and materials trades, like what led the stock market in Q1 and even into Q2 here has been energy and materials. the most beaten down sectors.
Right.
Like fund managers are finding value in physical stuff and commodities.
Yeah, let's talk about one of those other areas that basically gets no love at all, and that's the fertilizers.
Oh, yeah.
Like, it's just ignored. And that is in this whole realm of the commodities and natural resources and all of that. And those stocks have not rebounded like the big oils have and the mining stocks.
Give me a name. Let me look one of them up here and see who
CF Industries,
CF,
apparently.
okay.
The ticker is CF. That apparently we saw some buying into that in this quarter, and they do both the nitrogen and the potash fertilizers. They're one of the big guys, but they've had their difficulties.
Yeah. So for Q1, it looks like there was positive net accumulation of about a 4% increase in shares held, and I see some big buyers. T. Rowe Price buying CF. Adding like almost 7 million shares, which tripled their position. Alliance Bernstein adding almost 3 million shares to take their total to 12.7 million shares, and that's over a 5% position. So, yeah, big fund managers really trying to pick a bottom in commodities here.
You're also, with some of these, getting a dividend yield that some of them have been cut, but they're still rather juicy. So you get that. You get the
double whammy of buying something cheap and you get the dividend. Yeah.
Yeah. What's going on with Agrium? Because they're fertilizer, but also agribusiness. That's ticker AGU.
AGU.
I did find that Jeffrey Ubben at ValueAct, his portfolio is a $10 billion portfolio. He's actually selling.
Okay.
But it's just a small stake.
He probably had to cover his losses in Valiant Pharmaceuticals.
Is he big in that?
He was a big buyer of that.
Okay, maybe. Because it seems he started buying a couple years ago in 2014. So it seems a little unusual that now would be the time he would get out.
Yeah, so let me take a look here.
He only holds 13 positions, though. But I'm just curious if other people are buying into them.
Yeah, so he was a big seller. Yeah, so he sold 6.8 million shares in Q1 and still holds about 3.1.
Okay.
And this guy's a smart investor. He was the guy who bought Microsoft at $25 back in 2013. He plunked down $2 billion, doubled his money there.
It's still his biggest position and his number one position. It's 31% of his portfolio.
Which is?
Microsoft.
Okay, good.
Yeah. So he's definitely jumping in on that one. Okay. Well, I think the fertilizers are an area that definitely you have to think long term. They have bad Zacks ranks. They're 4s and 5s.
Yeah.
Maybe they'll get up to a 3 soon. I don't know.
Yeah, obviously they're looking at population growth. We're going to be at 9 billion people in a couple of decades, and we've got to feed the world somehow. So it's going to be, making better use of the land resources we have to grow food.
Right.
And that requires obviously chemicals.
Right.
Look at Bayer trying to buy Monsanto, a pharmaceutical company buying the poster child for GMO foods.
Yeah, that's an interesting acquisition.
They're obviously trying to make a bet on the future of food.
Yeah, this is definitely an area to stay in tune with. And then I noticed there was some action around the regional banks. This is an area that I've been real
you pay
fond
attention
of.
to that. Yeah. I don't, because I'm like, interest rates aren't going up, so how are these regionals going to do?
I know. It is a bet on the future as well, because you're assuming at some point the Fed may raise. We don't know again, and this area will do better as they raise. But if they don't, you're just kind of treading water, waiting. But I noticed
they've got so much competition from the peer-to-peer lending. That's another.
That's an area
that
for
area
sure.
is growing. It's got to be. I mean, to me, it seems kind of zero sum. Yeah, it's going to create some new lending on the margin, but basically, it's like, do I go to the bank or the bank's credit card, or do I go peer-to-peer?
I think it depends on what size regional bank you're talking about.
Okay,
I saw that there might have been some buying in KeyCorp. I don't know if there was, but I saw some. KEY is the ticker.
Yeah, you're
there.
right, because a lot of regional banks are going to be lending to the small to medium-sized business in their community.
That's right.
Which peer-to-peer lending can't do if somebody needs $100,000 or something.
Yeah. KeyCorp is one of the bigger, that would be a big regional bank. And then you have the smaller guys. Those, there's there's pretty many to choose from. That's why I kind of like the ETF if you're going to do regional banks.
So do you want me to look up a name where you
Yeah, look up KeyCorp. Just
so what's the symbol there?
It's KEY. Out of curiosity to see if anybody is jumping in there.
So only slight selling of shares, down 2% for institutional holders.
Okay.
But let's take a look at the big buyers. And you have J.P. Morgan Chase, boy, really coming out of the woodwork here, buying 15 million shares in Q1 to bring their stake to 37 million shares. They really like KeyCorp, obviously.
Yeah.
But there's a lot of shares outstanding because it looks like that's not even over a 5% position. And a couple other firms tacking on 9 million, 7 million. Systematic Financial Management, that's a hedge fund I know about. They bought 6.8 million shares. Bank of Montreal bought 6.3 million shares of KeyCorp.
Okay.
So obviously large institutions like the regional bank play too. But it's just like, we talked about whether you're talking about gold miners or fertilizers or regional banks, it's really, you can't just buy the whole industry. You've got to pick the horse that's going to win.
Okay, so you don't like the ETFs in this case?
Not necessarily, because
Okay.
I don't think they're going. I don't think that buying the regional bank ETF is an awful idea. But I think if you're really going to invest, maybe you want to know the bank and pick the bank that's going to win.
I also saw that Paul Isaac at Arbiter Partners, this is a small fund, so most people probably haven't heard of him unless they do follow the banks because he's a big banking investor. It only has $1.2 billion in assets, but it has held 20 of these smaller banks in its portfolio during the first quarter. Yeah, maybe you should look up this one and see, if anyone else is getting in. It's PB Bank Corp, and the ticker is PBBI. And he just added that one in the quarter. But I'm curious. Apparently, he calls the regional banks the trade of the decade.
Oh, wow. That's really interesting. I want to learn more about him now. I see him here. Arbiter Partners. They picked up about 200,000 shares. It's a new position of PB Bancorp. And clearly, he also bought things like he bought some calls on Chicago Bridge and Iron. He bought eBay. He bought Cowan Group. He sold, let's see, nothing really interesting he sold, but for a small fund of under $1 billion, that's relatively small.
Yeah.
Who owns 20 regional banks. So looking at his breakdown, 30% of his fund is allocated to financials.
Wow.
So that's
a big bet.
Yeah, and total holdings here. Yeah, I mean, he may only own 50 stocks and does a lot with options because he's a smaller fund to get some leverage. But yeah, he's obviously got a view on regionals that's worth taking a look at.
What about this other regional bank I came across that some managers are jumping into? It's Mackinac Financial, MFNC. These are real small banks. Unless you live in these towns and stuff, you really have never heard of any of them. But I'm curious if apparently Joseph Stillwell has been jumping into this one. He's a big bank activist for like numerous number of years. And he'll hold for years, 5 years or longer, apparently.
So and was that Manufacturer's Life? Was that the who?
Mackinac.
Oh, no, you said Stillwell. I
Yeah.
see. Yeah, Stillwell started a new position of only 35,000 shares.
Okay.
The biggest buyer was Manufacturer's Life Insurance Company, adding about 140,000 shares to their 100,000 share position. So,
but it is a small bank, so you're not exactly buying millions of shares in these.
Yeah, this is a small cap company, right? Like under 500 million, I think.
I think so. Yeah.
Hey, can I talk about one stock and one fund manager in particular?
Oh, definitely.
So I own Broadcom, symbol AVGO. Used to be called Avago Technologies. Now
I get confused whenever I hear Broadcom and then this weird ticker. Yeah. Why don't they switch the ticker?
Well, maybe it was simpler to keep the ticker.
Maybe.
It was more, they don't want to get away from traders who are AVGO,
addicted.
AVGO, yeah. And some of us by mistake, I'll still call it Avago, but it is Broadcom now. And this is a stock, we stuck with in the first quarter, got beaten down to $120 on some of the Apple fallout because they are an Apple supplier. But it's not a huge part of their business, not like a Skyworks, which could have been 30% of Skyworks' business. So Avago was, I just always thought it was a buy at 120, and we kept doing it. We own it still. Keep getting upgrades. Somebody yesterday bought $2 million worth of call spreads way up high, like the $175 to $200 strike out to January. And Bank of America has a $200 price target on Avago. So here I am talking my own book about how great Avago is. But you should look at the company and see what they do. I mean, they don't just, so they make the chips for iPhones, but they also do enterprise connectivity. So they're helping enterprises build the 100 gig network with fiber, et cetera. And they have to build all the chips and hardware for that. But what I want to talk about is the buyer we had over in Q1 was Maverick. Maverick Capital has been around since 1993. It's Lee Ainsley was a Julian Robertson tiger, and so this guy's been around so long. He's got a very successful track record, and they hold positions for a long time. This is an example to me of a fund manager. So we're all worried about, hey, what's the Fed's next move? Is it gonna, what's the economy doing? Are we going into recession? What's going on in Europe? What's going on in China? This is a fund manager who basically says, I don't care. Here are the stocks I'm buying. And he bought a lot of stocks in Q1. I mean, he started a new position in AbbVie, a new position in Accenture, a new position in Google C-Class. He's buying Auto Home, Biogen. He actually bought Herbalife. What else is he buying? NVIDIA. And he added to my favorite company, Avago, quadrupled his position from about 200,000 shares to about 800,000 shares. So the point is that this is a fund manager looking out 3 to 5 years. And he obviously has been successful for 25 years, that he has a relationship with his investors that, he's not getting redemptions all the time. And they understand that he has a long view.
It looks like there's a lot of tech in there. So he's taking the long view on technology.
For sure, but I mean, he has got a lot of biotech. He increased a position in American Airlines. He increased a position in American Axle and Manufacturing. So he's pretty diversified. I should look at the breakdown of his sectors. I know we only have a couple minutes left, so if you had any closing thoughts while I look this up.
Well, it seems to me that a lot of the fund managers, and given what the stock market did in the first quarter, obviously it was selling off. A lot of them seemed to jump in and try to get some deals here.
For sure.
And that's something that I think a lot of investors, can emulate and as you said, trying to keep a longer term perspective.
Yeah, if you are an investor and this is money.
Not a trader.
Right. If this is money you're trying to grow and you're looking out 5, 10, 15, 20 years, you want to think like these guys and watch what they're doing. They buy the dips. They're not worried about the Fed. They're not worried about recession right now. They're buying quality companies that they believe have a great long-term future. Yeah.
Or as Paul Isaac, said about the banks, the trade of the decade, not the trade of the month or the trade of the week, none of that.
Right.
But decade, that's pretty long to think for most investors.
It is. But if you think about somebody in their 30s or 40s, who's got that money socked away in retirement accounts, you want to think like these guys.
Yeah. So does that mean I want to stay away from gold?
I just, to me, I have a bias. And my bias is that gold is not the hard currency that some purport it to be, like a Peter Schiff. I don't look at it that way. I think that maybe that was a valid view 10, 15 years ago still. Like you think, oh, the Chinese are going to, get out of the U.S. dollar and buy the euro. Well, in currencies, it's all relative. Currency values roll around. So the U.S. dollar is inflation is not going to wipe out your future. The future earning power of your investments. So to me, we're in this era where quantitative easing has proven itself, meaning central banks, we don't like them to be at the center of everything, but unfortunately they are. And what they've proven is that they're going to keep the financial system going with, their tools. And unfortunately that's printing money. Now, if you think that buying gold is a hedge against the US dollar, it's just going to roll around. It's just going to keep rolling around the world from one currency to another. And so you can trade the euro and the dollar against each other. And I'd rather do that than own gold significantly for the long term. Maybe a small position, but I don't think it's not going to replace what central banks are doing and will continue to do.
Okay, that's good advice. I'm going to go over the tickers again that we discussed in case people missed them. We had CF Industries, ticker is CF. Agrium, the ticker is AGU. Keycore, the ticker is KEY. We had PB Bancorp, that ticker is PBBI. We had that other small little bank, Mackinac Financial, the ticker is MFNC. We also talked about the gold ETF. The most common one is the GLD. And then Broadcom, also formerly known as Avago, with the ticker AVGO. And if you want to know more about Kevin's trades, following these big hedge fund managers, you can check those out in his Follow the Money Trader, because he's following them every day, what they're doing. And you can also check out all of our articles, of course, on Zacks.com. And you can listen to our other podcasts on SoundCloud. We're on iTunes. We're on that Amazon Echo thing. If anyone is listening there, you can just summon us on the Echo, apparently. And you can also click on it on Zacks.com. The podcasts are also there. So for everyone here at Zacks, I'll see you again next time.